All right, so there you go. Some perspective on health insurance and indeed term insurance. We didn't discuss too much of the latter, but health insurance certainly. Remember what Sarabjit just spoke about in terms of how much coverage you should have is a very specific individual decision that you have to make. And there are a lot of parameters that could affect the premium that you pay, including your age as well as your medical situation, whether you have pre-existing conditions. So consider all of those aspects before you go and make a decision. Now, the second part of today's program, I want to dedicate to an asset class that has done incredibly well. It has, in fact, in certain time frames over the course of the last year and a half, beaten equity hollow. I'm talking about gold. And in fact, gold prices are at record highs even as I speak to you right now at $3,400 per troy ounce in the global market, and some actually are pointing to a possibility of $4,000 on the card. Joining me to talk about where gold is heading and why, in fact, it has reached this point is Kunal Shah, the head of commodities research at Nirmal Bang. Kunal, let's start with that first question. Why has gold reached this point?
Yes, so it's been a relentless journey for gold, the way it has been moving up from $3,100 to $3,400 in a matter of 1 month. So it's a similar scenario of Cold War. After US came up with a tariff and gave relaxation to all the countries except China and imposed new tariff on China, this is a clear act of trade war and a major trade war where now China is going to find very difficult to ship their products to US. So now this is not just about US. China continuously came up with a very aggressive statement. And in fact, today morning, they made a very bold statement that they are not going to allow, any country trying to isolate their country. So I think this is more of a Cold War scenario, and that is what is basically played on in gold prices. Gold prices have been moving up from 3,100 to 3,400 only because of the trade war. You see the jewelry demand of India, China going down. The sovereign buying of gold is also moderating. So it's just the global money managers are buying gold ETF in a fear. If this doesn't de-escalate, then what happens? And if this continues for a prolonged period of time, then what happens? These are the two scenarios which is basically played in gold prices. And that's why gold prices is trading the way where it is trading right now. $3,400, it made an all-time high today. So this is the story why gold prices are moving up.
Yeah, it's trading at all-time highs, as you pointed out. The question is, where do we go from here, Kunal? Because we've already moved up very, very fast. And this is by far and away the best performing asset class, not just in the year so far, 2025, but I think from the start of 2024 as well, right? So from that perspective, I'm pretty sure that those that have invested in, for example, a gold ETF or digital gold are wondering, what is the upside potential of gold right now?
So as far as the global economy is concerned, we are in uncharted territory. We don't know what's going to happen, whether this step. So the answer, whether the gold prices are still going to go up to $3,800, $4,000, it depends upon what is going to happen with the trade war between US and China. So what I believe from here is, I think gold prices have discounted all the possible reason for it to move up. These are not the levels to go long in gold. This is my very strong point of view. I believe if you are owning gold, you should take some profits. I am expecting correction, profit taking, whatever you call it, in a next 15 days to 1 month period, because I don't see any value right now at going long in gold at these levels. 3,400 is not the level I will recommend retailers or even for that matter HNIs to buy gold at these levels. These are the levels where if you have bought gold at 50, 60, 70,000, perhaps you book it once, wait for a correction when it goes down to 87, 86, or perhaps 88,000 on India, $3,000 on COMEX. You start entering again, re-enter the long position. But these are not the levels to go long. I'm pretty convinced and pretty sure about it.
Okay, so let's talk levels, because ultimately, if you're saying you should take some money off the table, I think a lot of people have started doing that already, Kunal, because if I look at the flows data for the month of March, then the gold ETFs already showed a net outflow of about 77 crore. So people are seemingly taking money off the table, those that perhaps had gotten in last year or even earlier in the year, because the kind of returns that you've made are tremendous. So if you are sitting on substantial gains, at what levels would you look at booking on a trailing basis? Is that the way that you should do it?
Okay, so I think these are the levels 96, 97,000 on India. These are the good levels to book your profit. These are not the levels to go long. And with whatever is going on, if there is some solution between US and China trade talks, or there are trade talks happening between US and China, that will lead to 8 to 10% correction in gold prices. I am not with a bearish view recommending, your profits at these levels, wait for a correction to re-enter into long position. So my view is to book profit and wait for a correction, and then you can go long.
Okay. Is this the view for gold and silver? Because I think of late, Kunal, a lot of people are also looking at silver as an option, and that, I guess, usually happens when there's so much demand for safe haven that some of that bubbles over, if you can call it that, to silver as well, despite the fact that 2/3 of the demand for silver is industrial.
Yeah, it's a great question. So silver is the metal where the major deficit is being running from last 4 years. So today, at the end of 2024, the difference between the demand and supply was showing a deficit of more than 180 million ounce in a market of 25 million ounce. So I think this is substantial, 8 to 10% deficit. The supply side of silver is weak. But why silver is not able to outperform gold is the solar demand. The US imports a lot of solar panel from China. I think that is going to pause. So that demand was growing at a 10% double digit demand growth rate. So that demand, the solar demand is going to go down, at least the one which were going to US. So that is definitely going to cause some softening of demand growth, and that's why silver is underperforming. But I think solar as a sector is a evergreen sector. So some of the other country will make up for some of the losses which you are going to see. But I feel that silver is still having a potential to outperform gold. China is going to buy metals, industrial metals in their state reserves going forward. We are going to see Chinese government may come up with a stimulus package, and they've already commented they are going to add a lot of these industrial metals or perhaps even silver in their strategic reserves. So I am not worried a lot about slowdown in China as far as the silver is concerned or the industrial metals are concerned. I think the outlook remains pretty optimistic. It's just a matter of time when they take some solid actions against whatever has been happening against them.
Okay. So, Kunal, the last question, which is what should you do in terms of strategy, right? So, generally, you say 15% of allocation in your portfolio towards gold and or silver, right? Would you say that, as you're pointing out, it's not a good time to buy fresh gold? But would you take money off the table? Would you deploy that in silver as of now and wait for a 10 to 15% drop in gold prices, if at all that comes through, to buy more, especially in the context of some people who are saying 4,000 levels are possible for gold, 5,000 levels are possible for gold?
Okay, so it's a very good question, and your question makes perfect sense for me to answer. Yes, you are right, and I believe that this is the time when you booked your profits in gold. There is a possibility that in next 1 or 2 months you may see a correction of 8 to 10% in gold prices. But because of what China is doing, you may not see the industrial metal may not collapse that sharply. So silver looks quite promising as compared to gold. So when gold goes down, silver do not remain exception, but already silver is underperforming. So the downside to silver future is limited. So if you buy silver around 93, 94,000 rupees on India, the possibility of for it to test 1,05,000, 1,08,000 is very high as compared to gold immediately shooting up to $4,000 level. So in a longer run, yes, it can, but right now it doesn't make sense. So everyone who has missed the rally at $3,200, if you call out for gold to test $3,500, it's not a big number. Gold prices, if you would have called gold bullish at $2,000, and then you are recommending them to book profit at $3,400.
Point well made. Kunal, thanks so much for joining me on this conversation. Pleasure having you on the program. Just to drive home the point, what Kunal was saying is that if you've not deployed yet, then perhaps consider holding your horses, because gold prices have moved up very, very quickly. Silver, to a certain extent, has underperformed gold, so you can weigh your strategy in precious metals. Generally, of course, advisors would say consider both of these precious metals together when you're looking at your allocation, and don't go overboard, because there tends to be quite a bit of volatility here as well. Now, remember that you also have the option in India to buy silver ETFs now. They are available. Gold ETFs are available as well. And this is important because in the recent past, gold bonds have not been issued. So unless you're already holding gold bonds, in which case you should consider holding on till maturity, there aren't very many options available in the digital space to buy gold. So look at what we've discussed over the program before you decide your investment strategy. That brings us to the end of this edition of Your Money Matters. Let us know what you think in the comment section, and do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.